Good morning, everybody. It's Friday, April 26th, 5:28 a.m. Central Time. Grain markets are mixed this morning. Brian Split is joining us, guys. Let's start off with the drought situation and then some weather.
Light to moderate precipitation across the Corn Belt last week eased drought conditions in many areas. Conditions improved in southern Minnesota, northern Missouri, southern Illinois, northern Michigan, and across a large portion of Wisconsin. Northern, eastern, and southwestern Iowa also saw conditions improve. Meanwhile, dry conditions in southern Missouri and western Kentucky caused drought conditions to expand. The majority of the high plains experienced above normal temperatures along with dry conditions this past week. Because of this, conditions worsened in central and western Kansas as well as in the panhandle of Oklahoma. Eastern South Dakota also saw conditions deteriorate. So when we look at the percentage of U.S. areas experiencing drought, corn country 23%, soybeans 21%, winter wheat 30%, spring wheat 26%, and cattle country 19%.
Brian, when talking to clients, what are the drought concerns and where are the drought concerns?
Still a little bit in Iowa, but that's definitely been healing itself over the last several weeks. The red blotch in Iowa, when we look at the map week to week, has definitely gotten smaller.
Yep.
I do have some clients in Minnesota that have been talking about dryness, maybe that far northeast pocket of North Dakota. I've had some clients in Missouri, in what would be really the far southeast corner of Missouri. I've been talking about dryness, but I just think back to a year ago when we were looking at these maps and the percentage of the growing regions that were affected by drought were 50+%, and now we're less than half that. So, when we really look at Illinois, Indiana, Ohio, the whole state is white. There's no drought in those states, so it's really just confined to some of the smaller areas here.
There's some rain on the radar this morning. The rains have returned to the central U.S. and the Corn Belts. If you look at the radar, and if you guys have amounts, early amounts, drop them in the YouTube comments. But South Dakota, a little bit of North Dakota, western Iowa, eastern Nebraska, a little bit of like the Oklahoma-Texas border area. It's raining this morning. It's going to be some pretty decent totals. This is just the next 72 hours of expected precipitation. And when you zoom in on the Corn Belt, you're talking an inch, 2 inches of rain across most of the western Corn Belt and a little bit of western, northwestern Illinois. I think there's been a lot of planting progress done this week. Farmers knew these rains were coming and pushed pretty hard. Are you hearing the same thing?
Yeah, I mean, assuming that there aren't any pop-ups that weren't in the forecast, I've got a lot of producers that are going to be done by this weekend. And yeah, what we've got coming in here in Iowa, that'll slow things down for anybody that hasn't finished up prior to that. But yeah, the progress that we are going to see from last Monday to the upcoming Monday, as far as just a week-to-week change, I think will be a pretty big number.
Should be substantial. Here's some of HRW wheat country, which has been very dry, and there are some rains expected in central Kansas, eastern Kansas, but then you got that big pocket of western Kansas that is going to stay dry the way that it looks. Have you heard anything from HRW wheat growers in these areas?
Some of the wheat growers are already talking about, writing off a portion of their wheat area.
Yep.
I talked to an individual that had a couple different plots, and he said, I've got an 80 here, I've got 100 acres here, and then I've got another 90 over here, and that 90, we're gonna disc that up. So there's definitely talk about abandoning some of this stuff already, but we'll see how things evolve over the next couple months.
Okay, that's a good segue. The wheat market has acted very well.
So, U.S. wheat futures rallied again yesterday. The July 24 Kansas City contract gained more than 10 cents and posted its best close since late December. The contract has now rallied nearly $1 per bushel since bottoming in early March. Headlines regarding the Black Sea, possible Indian imports, and declining U.S. crop ratings have contributed to the rally. The contract has closed higher for 6 consecutive days.
I've got a July Kansas City wheat chart here. I've got some retracement lines. I threw a 14-day RSI on there. This thing's way overbought, as it's been for the better part of a year, I think. Feels to me like short covering begets more short covering is kind of where we're at right now. Like the technical posture has changed, and maybe the headlines had something to do with that initially, but now it's like the posture just looks different. So maybe these guys, the funds, maybe they just want out.
Yeah, I mean, the chart has a very identifiable pattern as far as that low that was made. And we talked about that in the subscriber video earlier this week.
Yep.
The measurement of that pattern suggests 645 on this particular chart, July HRW.
Pretty close today.
And what that means is that if you're trading the breakout of that pattern, that is your profit objective. That doesn't mean that we expect that you just stop there. It could very well go higher than that, but if you bought the breakout of that ascending triangle, which is dictated by, if you look back to over the last 2 months here, you've got a lot of these highs that were up in that just under $6 area, and then you've got an uptrend below the market. So when we broke through those highs, and it was like 592, 595 and 3/4 up in that vicinity. And once we broke through that level and broke through the 100-day, then that gave us our measured objective. So it could still go higher. We could reach some of these retracement levels, but that is the measurement for that particular pattern.
You might be able to make the argument that grand scheme of things, from like the big commodity or grain market high that happened in 2022, you might make the argument that wheat led the way down. Could wheat lead us out of the dumpster fire here that we've been involved in for months and months?
You know, it sure seems that way. That's how it's behaving right now. Wheat is definitely taking the lead. And then we've got corn, which has been more or less sideways for the last almost 2 months now, which I think sideways right now is a victory for corn, especially as we're approaching delivery and we're not seeing the same type of price action approaching delivery on the May contract as we did off of March and as we did off of December. And then you've got the soybean market, which just as of a week ago today was revisiting the February lows. So technically right now I would rank wheat as number 1, corn as number 2, and then soybeans number 3.
Let's jump to this ethanol story.
Ethanol producers will soon have a climate model for sustainable aviation fuel subsidies. The Biden administration is expected to release the model this coming Tuesday. The model will dictate how ethanol producers can qualify for SAF subsidies through climate-smart agriculture practices. Those practices include the use of cover crops, efficient tilling, and efficient fertilizer application. Reuters reported earlier this month that the model is projected to be more restrictive for corn ethanol than originally thought.
Maybe somebody at the White House was listening to my bitching and moaning about all of this the last couple of weeks, because we had these stories about how this LanzaJet plant in Georgia was importing Brazilian sugar ethanol to use for SAF and not using much U.S. corn ethanol. So this is a step in the right direction. We're not exactly where we need to be. And Brian, if everything goes electric, we're going to need the SAF for sure.
We are. I'm not planning on going electric anytime soon.
No, me either.
They're going to have to force it down my throat.
Yeah. No, I'm there. This is good news. I don't know that it changes anything right here and now, but big picture, this is good because these plants in the United States should absolutely be using U.S. corn.
U.S. corn export sales were strong last week. Net corn sales surpassed pre-report estimates at 51 million bushels. The print was up noticeably from the previous week and up a whopping 74% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales fell below pre-report estimates at 8 million bushels. The print was down 57% from the previous week and down 29% from the prior 4-week average. China was the largest buyer for the week. Net wheat sales were reported at 3 million bushels, down noticeably from the previous week and down 4% from the prior 4-week average. China was the largest wheat buyer for the week.
Corn number was really good. Soybean number was piss poor. And the wheat number, you're not looking for good current marketing year numbers this time of year because the marketing year is wrapping up. I'll tell you what, Brian, we talked about the Panama Canal thing earlier this week and how the traffic is expected to increase, water levels expected to rise. I think that could be a big positive for corn and soybean exports.
Yeah, I mean, just the inability to get traffic through the Panama Canal has been an issue that we've been dealing with for quite some time. And it's very similar to when we think back to last fall or a year ago fall when we had issues with the Mississippi River. It just affects the traffic and the amount of product that can move through it. So this corn number is great. We had 2 weeks in a row of very poor corn exports. So jumping back over 1 million tons is good to see. Hard to really expect solid soybean export sales this time of year. It's just not the time of year for it. But what is disappointing is just the lack of a new crop book that we have right now. Typically, we should have, at least 500,000 tons, but other good, strong years, we might have 2 to 2.5 million tons of new crop on the books. We're just not there.
China has 0 new crop beans on the books out of the U.S. 0 for the first time, like in forever, basically seasonally. There were some light amounts on the books at this time during the trade war, but so we have less new crop beans to China on the books now than we did during the trade war, which is kind of troubling, I guess.
Colombia has restricted the import of U.S. beef. According to the USDA, Colombia is restricting imports of U.S. beef and beef products from states with confirmed cases of bird flu in dairy cattle. The bird flu has been confirmed in 33 dairy herds across 8 states. Colombia is a very small importer of U.S. beef, importing only $39 million worth of beef and beef products back in 2023. The U.S. exported approximately $10 billion in beef and beef products last year, so that gives you an idea of how small they really are. No other countries at this time are restricting U.S. beef. The Colombian restrictions have no scientific basis. The meat and milk from these cows that do become infected with bird flu, that is still safe to consume.
Was this headline, I see it says 1:23 p.m. yesterday, was that out during the market period? I'm not sure if it was or not.
I
Cattle
don't
finished
believe
higher
it
yesterday.
was. And cattle had a massive reversal to the upside yesterday. We took out some of the short-term levels of support that we built in, and then through the rest of the session, we recovered. We closed above the previous day's high on the nearby June. So that was a very good technical day for cattle.
Yeah.
You don't want to see more headlines of this from larger
Well,
buyers.
here's another one. one in 5 U.S. milk samples have the bird flu now. That's not a good headline. And this was out.
Yeah.
I think it was out yesterday. They updated it early this morning. But
we have no history on the bird flu in cattle, so they could have had this years before this. That's something that they need to consider. That there is no history of this. This is not that big of a deal.
And
It
I
doesn't
was
have to make
reading
sense,
that
though. It
we
doesn't have to make
also
sense.
believe we're achieving herd immunity, right? Because when you think about how viruses work, right, and they spread through the population, and then they get less severe, and we saw that with COVID ourselves, right? And they kept talking about all these different, strains of COVID, but every time the virus mutated, right, it got less and less severe. It transmits easier, but the symptoms were less severe. And that is how virology works. So we want to achieve herd immunity. It's the headlines that get people.
Dr. Split, appreciate
You're welcome.
thoughts.
Yes, sir.
U.S. economic growth fell to a level not seen in almost 2 years last quarter. GDP increased at a 1.6% annualized rate during the first quarter, falling below economists' projections. Also, during the first quarter, inflation rose more than expected as the Fed's preferred gauge of inflation, the Personal Consumption Expenditure Price Index, climbed to 3.7%. The increase marked the first quarterly acceleration in a year. A 5.1% increase in the service sector was the main driver of inflation during the first quarter. When the Fed meets next week, there will be increased pressure to further delay rate cuts and possibly even consider raising rates.
The big impact for most people is the rate thing, and it now looks like it's going to be November, December until any such rate cut happens, if it happens this year at all. So the GDP was still positive, but it missed expectations. The S&P came back and finished higher yesterday. I don't like this chart, so I threw this one together. This 1.6 isn't a bad print. It just missed the mark. And I look at this chart and it looks to me like we're still kind of mean reverting after COVID. I know I know that was years ago, but that's still what it feels like to me. I just don't know if we're back to normal yet. I think we're still sorting it out.
Yeah, 1.6. I mean, it's not a number to freak out about. It's not a super solid number. It's not the best number we've had over the last few months. But yesterday was a wild day in the stock market. I mean, they just slammed everything because of that 1.6 print, and then you started getting some of the earnings from some of the tech companies, and we just absolutely raced higher late in the session. So it was a pretty wild day.
We've had a modest correction. The S&P pulled back 5.9, almost 6% from the all-time high during this little stretch here. And a lot of that was triggered from that CPI print that I believe was earlier this month, and then your GDP print yesterday. We bounced back. I don't know if this turns into a bear market. This still looks awfully friendly to me, like bigger picture.
We don't really have a pattern, so to speak, as far as a topping pattern. That doesn't mean it can't go lower, but I'd like to see. One thing I would say that if we were to look at this and stretch it all the way back, the highs that we made this month would be at the upper end of a channel And that would be true for both the Dow and the S&P, where we've kind of reached, peaks from early 2000s to peaks in '08 to the peak in 2021 to this peak. So all those peaks are lined up along the same kind of upper channel line. And that might just suggest that we may need to go from the upper channel line to the lower channel line in a big picture sense. But still, I mean, market is rigged to go up, and it's still in an uptrend.
It's rigged. What does that mean?
That you have
Explain yourself.
You have inflows, and not that it's rigged, but it's rigged to go up, right? Where you have inflows every month from companies that, retirement money goes in every single month. Money goes into IRAs every month. So there's always an inflow in this market every month from people for the retirement. So it takes a lot for people to stop that and for that inflow to not be there.
It is, and it's priced in dollars, which means that over time it's probably going to go higher. Short term, maybe we're due for a larger correction. I don't know. Run the cattle quotes from yesterday. What did we do?
So as Brian said earlier, the cattle market had a darn good day yesterday. Feeders were up $1.65 to $2.15 higher. Live cattle were up $1.45 to $2.67 higher. Box beef was down yesterday. Choice ended the day at $295.66. That was down 8 cents, and select ended the day at $288.41. That was down 201.
Outside markets on Friday, U.S. dollar's up a little bit. The stocks are up sharply. The S&P's up 36. The Dow's only up 40. Bonds are about flat. Gold's up $17. Crude oil is up 52 cents in the June WTI at 84.09. Have a great weekend, guys. We'll talk to you on Monday.